US News put out this article on what they call the 7 best dividend-paying ETFs that you can consider buying. Here are the 7 ETFs that they recommend, and again, investing has risks. Make sure you always do your own due diligence and never blindly follow a random guy on YouTube. Number 1, SCHD, which is paying out 3.6% a year in dividends. VYM, paying out 3% a year in dividends. HDV, paying out 3.8% in dividends. VYMI, paying out 4.4% in dividends. SPHD, paying out 4% in dividends. LVHI, paying out 7.3% a year in dividends. SPYD, paying out 4.5% in dividends. Now, as a disclaimer, every one of these with an asterisk, the first 4 that I mentioned, are dividend-paying ETFs that I am personally invested in. Again, do your own due diligence. So now, what does this mean? You can build systems where every week, every month, every 2 weeks, you have cash that leaves your bank account and it can be invested into a portfolio of ETFs. It doesn't have to be these dividend-paying ETFs. It doesn't even have to be dividend-paying ETFs, but you can pick some investments that you want to own. And now every time you get paid, a piece of your money is automatically going to be invested. And the way that you win in this game, especially in the cash flow game, is you stay consistent and you do it for the long term. Because now when you hear that a investment, an ETF is paying out 4% a year in dividends, it's not a lot of money. Because now if you invest $100, that's $4 a year in cash flow. But if you invest $100 a week, every week for 10 years, now that starts to add up, especially when every time you buy, you're getting $4 of cash flow, and then you use the cash flow that you're getting to buy more cash flow. If you stick with it and you stay consistent and you keep reinvesting your profits, well, in 10 years, you're going to surprise yourself. And you might be thinking, but Jaspreet, I don't want to wait 10 years before I can start using this cash flow. I want to have it today. Well, 2 things. Number 1, building wealth is not an overnight game. And when you try to make it an overnight game, well, you end up losing a lot of money to people selling you a whole bunch of get-rich-quick services. So I want you to understand that. And number 2, you can amplify and shorten the amount of time it takes for you to become wealthy. That's going to require you to earn more money. Now, how do you earn more money? Well, you can earn more money from a job, or you can earn more money from building your own business. If you can build your own business, there's no limit to how much money you can earn if you can sell more stuff. But again, it comes back to now, wealth is built through owning investments. It's through owning assets. What type of assets do you want to own? Do you want to own assets that will hopefully grow in value, or do you want to own assets that will pay you with cash flow? If they pay you with cash flow, it's a much more slower producing game. That's just the way that it works. When you invest in real estate for cash flow, you're not going to get a 50% cash and cash return on your money, or you're probably not going to. So you're going to get a slower return. Like for me, what I would consider a good return, when I go out and invest in real estate, I'm looking for a 7% cash on cash return. So when I invest $100, I want $7 of cash flow after my expenses. If I invest $100,000, I want $7,000 a year of cash flow after my expenses. So it's a very slow game. But if you can have more money and you keep taking this more money and you keep using this more money to go out and buy more of these cash flow producing things, if you stick with it, well, you're going to keep amplifying and growing the amount of cash flow. So you got to understand the game. First, you got to get the money. I'm not talking about how do you get that money today. There's a lot of ways you can get the money. You can do it from your own business. You can do it from your job. You can do it however you want. You got to get the money. And it doesn't take a special degree, a special way you look, a special anything to get that money. But it does take the hustle. It takes the risk tolerance. It takes the ability to learn. And it takes the ability to fail. If you have these things, you can go out and get the money. Once you get the money, the question is, what do you do with the money? You can spend all that money and be broke tomorrow. You can save all that money and be broke at some point in the future, or you can invest this money and work to build a future wealth. Now, when you invest this money, you can either be an appreciation investor, a cash flow investor, or a hybrid of both. I'm a hybrid of both, but I prefer cash flow generally. When you invest for appreciation, you're speculating. There's no guarantee that something's going to ever pay you in the future, but If it grows, you can see a lot of returns, and you can also get some tax benefits because you don't actually pay any taxes until you ultimately sell. When you get cash flow, you get a little bit more of a guaranteed payment, but it's much slower. So now when you're working to invest in cash flow, that's when you can decide how do you want to generate that cash flow. And right now I've been focusing on real estate and stocks. There's a third way that you can generate cash flow, which I want to highlight in just a minute. But now you can start investing in real estate and stocks. Real estate is going to take you more money to get started. Real estate has bigger and better tax benefits, but it's more involved. You got to spend more time, you got to spend more effort, and it's going to take more capital to get started. In stocks, it's much more passive to generate cash flow from stocks. Much less work and much less money required to start generating cash flow from stocks, and much less maintenance and oversight to do that. Anybody can start doing it with as little as $100. But the key with no matter what you do is you got to stay consistent. This is not something where you work to save money, you invest it once, and now you have enough cash flow to live your life. Or at least for 99.9% of people, that's not how it's going to work. But you have to now work to accumulate this money. That way you can go out and start buying these assets. And then that's where you can make the decision. Do you want the cash flow or do you want the net worth? I like the cash flow. That's the way that my brain works, because now I can just work to stack the cash flow. And this is where now I know how big I can live. I can live as big as my cash flow, because when my cash flow is growing, I can go out and spend more money, because now I know that if I spend all my money today, I'm going to get more cash flow checks next month. Now, this brings me to the third way that you can start generating the cash flow, which is the most difficult way to do it. And that's why I saved it for here, because when I talk about this, everyone's going to say, oh, but Jaspreet, not everybody can do that, and it's very difficult. Well, there is a third way. And this is going to be reserved for entrepreneurs, people who really want to build a business. The third way that you can generate cash flow is you can work to build or buy a business that you don't have to work in. And the way that it works now is you get paid the profit, but not a salary. And if you are able to build a business where you can pull yourself out of, meaning you can hire a CEO to run the company, now the business can run as normal. The CEO will hopefully, if you structure it correctly, be incentivized to grow the revenue and grow the profits. If they're getting a salary and either ownership or a piece of the profits, they'll be incentivized to do this. Now, your business is a machine that's working to produce more money. And where does that money go? The money doesn't go to the CEO. The money doesn't go to the employees, although they are the first to get paid. The money goes to the owner or the owners. And in this case, that's you. And so this is where you have to understand a little bit of corporate governance to really understand the way that this works. I'm going to jump back into the video in just 1 second, but before we do, if you are an investor and you're looking for an easy and free way to stay up to date on what's happening in the top financial news, from the economy to the housing market to the stock market to the crypto market to the global economy, then you have to check out Market Briefs. Market Briefs is my free financial newsletter that I created that will keep you up to date on what's happening in the financial news. You can read the newsletter in less than 5 minutes every morning. It's a fun and easy to read email, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below. When you go out and start a company, the first person that's going to get paid, assuming you don't have any debt and all that other stuff, is going to be the employees. It's probably not even going to be the CEO, because now you have to make sure that your employees get paid, because if you started a company and you're the CEO, well, if your employees are not getting paid, they're going to leave way before you do. So you got to make sure the employees get paid. You got to make enough money to pay the employees. Then when you have enough money coming in to pay the employees that you can take out a salary too, now you're working to make money for the employees and to pay your salary. Then if the business can continue to grow, the business is going to start making a profit. And this is where now obviously you can do a few things with that profit. You can take that profit and save it. That way your business can build a big savings account for a rainy day. Your business can take this profit and reinvest it back into the company. That way they can grow bigger. Or this business can make a profit, and you as the owner can take this profit money out and go out and buy a nice car or do whatever it is that you want with it. And if you can continue to grow to a business that doesn't require you, now you can go out and hire a CEO. Pay them a fair CEO salary, which is going to be a lot, and incentivize them to continue building and growing the company. Now, this is a lot easier said than done, but if you are able to build a business that does this, Now you have a cash flow producing business, because once you step away, the CEO is now in charge. You have fired yourself, brought in a new CEO. You still own the business. You own the equity. Well, who gets paid first? The employees get paid. The CEO gets paid. The equity owners get paid last. Because now as the equity owner, you get paid with profit. And you are the last person to get paid. And this isn't just me saying this. This is legally the last person to get paid. Because if your business goes into bankruptcy, the equity owners, the shareholders, the investors are the last people to make a penny. And most of the time, you're not going to make any money if your business goes into bankruptcy. So now, when you are the owner, if you can build a business, the employees get paid, the contracts get paid, the bets and the debts get paid. But if there's money left in the bank account, that profit, that is your cash flow that now you can use to live your life. It is not easy to do this, but it is possible. And it's another way for you to generate cash flow. So you can generate cash flow from businesses. You can do this by building a business. You can do this by buying another business, but that's going to take even more money, because if you want to buy a business this big that's producing enough cash flow that it doesn't need you, it's going to cost a lot more, likely $5 million and up, if not more. But it's going to be a multi-million-dollar purchase for you to go out and buy a business that doesn't need you. You can go out and buy real estate, or you can go out and start investing in stocks. And so now, depending on how much money you have access to, it's just where do you get started. Now, if you want to do more, you got to earn more. And that's a whole different skill set of how do you earn more money. There's a bunch of videos on YouTube that will go over how you can start attracting more money. And then the question is, what do you do with this more money? And the biggest mistake that everybody, not every, 99% of people make, 99.9% of people make, is as soon as they start making more money, they start living a bigger lifestyle. But if you really, really, really want to become wealthy, you got to understand, why are you working to earn more money? You got to work to earn more money to buy more assets. And in this game, in this video, it's buy more cash flow. You're working to earn more money to buy more cash flow producing assets, because now this cash flow will determine how big you will live. You want to buy a nice car? You want to go on nice vacations? Great, no problem. Just make sure your assets can pay for it for you. If you want to be a high earner or a high achiever, it starts with your mindset. And what I want to do now is go over 10 mindset shifts that you can start making today that all high achievers are doing. And number one is the blue ocean mindset shift. There's a book out there that I highly recommend you read called The Blue Ocean Strategy. And what the Blue Ocean Strategy